I'm gonna get started. If people join in late, then it is what it is. I've not got too long. Okay, so I confirm everyone can see the screen. So what I wanted to do today, guys, with you guys is I wanted to take a look at something we've not done in a while, which is go and look at the master indicators, right? And by that, what I mean is, of course, go and take a look at things like Bitcoin dominance, total, stablecoin dominance, so on and so forth. Right? Take a look at all of that. A few cryptos, a few stocks. You guys know how it works. But looking at totals, number one, because Tara asked me to, and if my clients ask me something, obviously I'm going to do it. But also because it is important to take a look at these things to figure out, does it look like we can go lower for now? Maybe are we in for a relief bounce, so on and so forth. Right? You can try and figure it out using stablecoin dominance, using total 1, total 2, total 3, Bitcoin dominance, so on and so forth. So we're going to take a look at all of that. I have people joining in. Let me take a look real quick. Some guys, welcome in. One sec, King Bro. I'm just going to mute you. Would you mind muting your mic, brother? Just in case you talk about something private. I wouldn't want it to, because this video is going to go on YouTube. So
一些难受吗？
I'm going to go and mute it. One sec. There we go. Anyway, first things first, let's take a look. All right, here we are. Obviously, I want to talk about Lemonade because this is a call I gave live. This one's absolutely cooking right now. So I literally just screenshot this because this is the most up-to-date position at 60.59. Currently having a little move back up on pre-market. But Lemonade, this was such one of the best calls of obviously this year. I'm not giving many yet, but so far this year, this has been the biggest cook-off done. Obviously, there's AXT as well, which we're long on, right? And I know a few people are in stock on this as well. But Lemonade, this was such a beautiful short to take. And I gave so many reasons as to why I built this chart out live in front of you guys. I told you guys, in terms of order flow, right? This is what reading price action is all about. Why this is the area I expected retested. And if you reject from this area, that's where you go short, is what we said when we went over this. It's on YouTube, right? This is a recorded stream. And that, ever since that has hit, after the ABCD completion, this has just been crashing, right? And now here's the thing, right? We fill the gap, right? That gap, in fact, I think I've got a squiggly here somewhere. One sec. Yeah. So that squiggly gap fill has finally come to fruition, right? We went a bit higher than I thought we would, but 3.61, a full extension got hit before the gap fill, and now we're going for the gap fill. So all of these people who have been long here, they're all stopped out, right? So the question now is, are they okay with simply retesting previous resistance as support, right? Or are they going to go for, which we know happens a lot, are they going to go for a consolidation range mid, right? So if I was to take the entire consolidation range, which is right over here, and we take the mid of that set consolidation range, you can see we haven't actually hit the mid of the consolidation range yet, right? We know Bitcoin did this. It came all the way down to hit the mid of the consolidation range, which is why we're hovering at the price we currently are for Bitcoin, right? But this is Lemonade. This, right, the thing is here now, if you see that buyers are absolutely backing this resistance flip into support, there is no problem trying to find an extremely, risk managed, like you guys know how it is. We're at a significant level. If you want to find a risk managed entry for a long here with tight stops, right, be my guest, because the fact of the matter is, as long as now previous resistance is support, there is no point in thinking, oh yeah, it's going to keep crashing, right? Now on the daily, obviously we've got no structure. If you're talking about structure, on the 4 hours we've got no structure. If anything, that's bearish. We've got a bearish engulfing candle taking it below. So if the 4 hours cannot reclaim the gap fill, we might actually go to that sort of $55 range before we have a relief bounce, right? So there is no structure currently coming in that tells us, oh yeah, this looks insanely bullish, right? So you can hold off on buying if you want. But if you now go and start reclaiming this range mid, you start confirming the top of this back into support again, then you have a reason to why you would try and take a long to, maybe even just 70 or something like this, right? Before you look for another lower high, maybe 79 for another lower high. But you'd be looking for that another lower high before we went lower back into maybe deeper in the box. But this has been an absolute cook. So this is where this is where the TP for the challenge account itself was done, right? For the actual stock we own. So 75% of the stock profits was taken when this happened, and also entered this short over here. Not on the challenge account, just loaded 50k into like a CFD account to go short on this specifically. But that's why this is my biggest position size, right? But yeah, Lemonade. And this just goes to show, it's like, everyone's so focused just on crypto. Like, you do not need to be just in crypto to make money. Not at all, right? You don't. There's markets, opportunities are everywhere. We don't focus on what market it is. We focus on what is the RR, what is the expected value, what is the sort of price action correlation, right? At that significant level. It doesn't matter if it's silver, if it's cocoa futures, if it's, crypto, if it's stocks, doesn't matter, right? All that matters is, do you have a technical reason, and fundamental if you're a fundamental trader, but do you have a technical reason for why you would want to enter a particular trade? We had a technical reason here. We had various divergences lining up, right? As you can see, lower lows in RSI, higher highs in price, right? We have relative weakening of buying strength. Then we see we're hitting full wave structure extensions, A, B, C, D, right? There's the 382. There's this 3.618. So the ABCD full extension has been hit. And I didn't give you guys a short here because at the end of the day, there was nothing here telling me in terms of like structure, in terms of anything else. There was nothing here telling me, oh yeah, you need to go short here, right? That was me trying to, that would have been me trying to catch a top. If I went short here, it would not be with the size I did. I would not be comfortable holding a position with big size like this, right? On CFD, if I went short up here, simply because there is no sort of weakness. There is nothing telling me, oh yeah, there's that sign that, okay, perhaps I should favor short here. But then you reject the 3.618. And then most importantly, the reason I gave this was the actual order flow, right? Looking at the footprint charts, when this particular, you broke down, went back below the 3.14 and then retested it, the order flow. We saw there was loads of trapped buyers in this area. There was aggressive buyers not being rewarded. All the volume taking place in this candle was taking place up over here, right? And then they went down. So what I was saying was, you either wait until the 2.618 is lost, or you go and retap the area to check, okay, is the market going to confirm that these trap traders are indeed trapped, and give them a chance, right? We went up, hit that area, exactly right to the T, confirmed that the trap traders are indeed trapped, right? As you can see right over here. And then that, as soon as that happens, the entry trigger is valid, right? Obviously, I didn't catch it as soon as that happened. My entry is 89, right? I believe it's 89 anyway. Let me just confirm. What was it? So just a bit lower. It's 89.98, right? So just a bit lower. But as soon as that comes in, it doesn't matter if, you're not exactly over there. That doesn't matter, because the fact of the matter is now your thesis of why you would be short has been accepted, right? So then, I'm a short from somewhere over here. It doesn't matter that I missed the quote-unquote top move. My theory is simple now. As long as we're below 3.14 and this area where there was trap buyers, I'm going to be favoring downside moves, right? And it's simply that. It's read the price action, and then after that, you correlate it to a risk-managed entry. And after that, all you have to do is either you wait for stop loss to hit, or you wait for trade to go, or rather, if you're in validation to hit, let's say, right? If you're like me, who trades off validations and invalidations of theses, or you wait for your play to play out eventually, right? And play out it did, bit of chop and then trend broken downside, right? So on Lemonade, the fact of the matter is the last high low that led to the high has been taken out. It's happened. Doesn't matter whether you're looking on the daily or the weekly. The last higher lows that led to the higher highs have been taken out. So the question is, are they going to come and put like a bigger flush in before giving us some sort of macro higher low again? So for example, one could come and do this, right? You could do this. You could do this and say, okay, there's a trend line. There's a trend line. The trend line is being respected, right? But if that trend line is lost, well, I'd say it's anywhere between 54 to a rate of like 46. That low, basically 47. That's where you'd be in for. But that's Lemonade. It's just a gift that keeps on giving right now. And this is just an example of doing less, winning more, right? It's like when two trades, one good long opportunity on AXT, we'll look at that as well, right? Which I gave. Second one was a short opportunity in Lemonade. And now I'm just simply going to hold this. And you can literally see, this is probably going to keep going up for a while longer as Lemonade goes lower. I'm gonna look to take profit soon, because now, as you can see, it's approaching support, right? I'm not going to be holding majority of my positions as support. But literally just, instead of being in 10 different positions, just find a few high conviction bets and then just get in, literally as simple as that. Right? But yeah, that's Lemonade. So just updating these as this is currently the only thing I've called. I'm not really called crypto. This is the only one I've called with like a validation, invalidation, AXT and Lemonade in terms of stocks right now. We'll look at a few more as well. But just wanted to update this because I know a few people are in these with me, especially AXT. I know not many people took the Lemonade short, but I know people are in AXT stock. So let me check. More people joining. Same. I know I think someone keeps joining and exiting. I don't know if there's like a problem with their setup or whatever. Oh, okay. Sorry, brother. I thought it was because we have a new member who's doing core with us for now, so I've got them into the server. I thought it was there. Okay. But that's Lemonade. So the other one I want to look at, of course, is AXTI. Remember what I've been saying is that's a overall 73% move, right, from the retest. This was, again, the yearly levels was given way in advance. So I was saying was, look, if this gets retested, I'm highly interested. So the retest happened. First level was successful, didn't go deeper, so the entry trigger's right there. 73% move up overall, right? And we're currently within 2 yearly level mids. 12-month buy seller zone mid and a 22,000 12-month macro read buy zone mid. If this level holds, like we're going to rally up towards 30 to 33 next, right? It's just what's going to happen. Let me just check real quick. Yeah, 33, 30, 34, so on and so forth. We got targets up here, especially this zone. I think we go to 33, 34. If this level, but this level is the hold for that to happen, right? If this gives us like some sort of a distributive structure, and you could argue this is distributive here, locally speaking. But as long as you're below the red box, you can easily hedge short on this as well, okay? Especially if you get something like this, like break below and then come up and retest it, because then you'd be treating this as resistance until flipped. That would be a very good trigger to go short as well. So both of these I'm looking to take profit soon, Lemonade short and AXT long, because as you can see, one's a support, the other's a resistance, right? This one, overall 73% up from that retest, right? And what I'm actually hoping for is eventually I do hope we go for a deeper fill. And the reason I took this on CFD and not on just stock itself is because obviously for me to have a big stock position, I want not just $17 to hit, right? I want structure to build over time at the yearly zone that I'm interested in. Just one tap for me isn't structure. For now, this is just in line with the trend. The trend has been up, so I'm going to take that reactive play. That's why I took a CFD trade on it. Reactive play. Once I close profit on it, rotate that back into the normal ISA stock account, right? And then buy actual stocks instead. Should it go down back towards 17 and lose it, go towards 14, 13, so on and so forth, right? We're highly interested. I can imagine a range forming here potentially. As you can see, there's a high, there's a low. We've rated the highs, go rate the lows next, so on and so forth. I can imagine a range forming here. So AXT. But this one, 73% up from the retest, right? Beautiful. 10K at peak, currently 8K. And I'm looking to take profits on this soon, based on what kind of price action we get at this general area here. But yeah, 2 stock picks, 2 cooks. So I'm very happy with how 2026 has started so far. Okay, let's take a look. Welcome in, guys. Okay, perfect. So let's now go and we're going to take a look firstly at, we're going to look at, let me go here. That's one crypto I'm interested in, SWI, but we'll take a look at all of these in a minute. This. First and foremost, let's look at Dixie. At key fib levels, but for this one, I want to completely reset it. This chart's been absolute banger. Because we've not looked at any of these in a while, right? So let's go ahead and let's take a look. Now, if you guys remember, what I've been saying about Dixie is it's within right now a absolutely humongous wave structure. and that is this one right over here, right? So if I now, that's on the 12-month, bear in mind, right? So this is a extremely big wave structure. There's one. So from that peak right there, the question is, was the 618 respected, right? And the answer is yes, it was. So if we go over here, the 618 is around here somewhere. There you go. Let me just get it exact. Jesus Christ. There we go. Perfect. 435 on that retracement. And then we know we've hit the 786, which is the normal Gartley, right? The 786, which is right here. Perfect. We've hit the 78.6. What the hell? We've hit that, and we've also hit, well, we've not actually properly hit it yet, but we are within the PRZ of the Gartley, deep Gartley, because the 886 was just about front run right over here. Let's do the T. I'm just gonna, I can't be asked to tell, I'm just gonna T guard. There we go. Perfect. So we know we have a absolutely massive, this is a decade plus, right? 2 decades in fact, 2001 all the way through to 2 decades, right? 2 decades worth of wave structure in this area. So no wonder it is significant, right? We noticed we just about front ran the deep Gartley 886. Then you came, what did you do? You put an inverted smiley. If you go to like a low enough time frame, right over here, there you go. There's your seller zone on the weekly. We very easily then put an inverted smiley, right, around the 786, reconfirming this entire area's resistance. So Dixie has been slowly trending down since then. However, another thing I've been pointing out to you guys is we have now officially gone and hit T1. There you go. We're currently at the literal liquidity rate of T1, right? So I'm going to go ahead and turn this off, turn this off, turn this off, this off. So obviously we've got the range extremes and the liquidity rates and front runs with range extremes and so on and so forth. But for now, I'll leave the 4 and 4 on, right? Simply because that's what we're correlating to. There you go. We are at T1. This entire zone, T1. Between 99 to 96, that's your T1 zone for now, right? So this is the first target for Dixie. So if you want to see a reactive bounce, it's going to happen from this area. That's what you'd think. If not, 0.5 would be next. After that, you go for T2 at 87 to 85. The question is, do we have any wave? You can easily see, in fact, that we do have wave structure taking us that low, right? So M shape, that right there. For example, you can do this. And that would once again give you a Gartley, right? 786 minimum, which is again, once again, just about front run. Or if you want to go a bit deeper, you'd have the 886, right? So you have a 886 and a 786. Gartley, deep Gartley, nearly at completion. If not that, then you also have this, which is slightly bigger, right? From there to there. 752 is still within the realms of a Gartley, right over here. And, if you were to bounce from this area, actually, no, I'll do it from here. This is still within the realms of a Gartley here. And that would, again, give you just slightly deeper 786, 886s, right? So we've got M-shaped completion points coming up below us in terms of why the Dixie could potentially see a bounce soon, right? And we know Trump is trying to put someone in the Fed chair who's trying to strengthen the dollar right now, right? Which is why the markets have tanked so hard, because we went from the dollar's going to get weaker, interest rates are going to get cut, so on and so forth, and did a complete 180 to, okay, we're going to try and strengthen the dollar, right? Which of course is not what you want for a risk-on market, right? With Donald Trump's nominee for the new Fed chair. So if the price action is solid around these areas, I don't think we go to 0.5. However, if we cannot get above the 382, eventually we will have no choice but to go to the 0.5. Right? So that's something we'll look at. And if you go to the 0.5, once again, you've got support, resistance, confluence over here as well. Resistance in the past, support. The 0.5 is going to be somewhere around here. But that's the Dixie, right? In the midst of a massive bearish wave structure right now. Don't forget, but the first target has been hit, right? So if you wanted a proper type 2 return, you could very easily go from here back towards even 110 before actually collapsing back to the downside. Again, if you wanted to, right? Within a falling wedge kind of structure here as well, looking to build one. So I don't think it's ready quite yet, but the strength of this thing will be important to keep an eye on. And typically speaking, if this is strong, that could give us our next nuke down on both crypto and stocks, right? In fact, I'd argue that's more like a parallel channel than it is a falling wedge. One sec. And we're going to put it to an actual point like that. Perfect there. So yeah, with the parallel channel, M-shaped completion points are just below in case it wants one spike lover. But all in all, Dixie currently at support, right? Because you're coming to test this from the top side. On the macro, you're coming to test this from the top side. Is it going to be a successful retest? Well, we'll have to see. Since this is technically a yearly structure, you got to pay attention to the yearly candle. Don't forget there is also a yearly buy-seller zone here. Right, so if I was to go ahead and mark that out real quick. The mid of that has been flipped to support, as you can see. We're holding it. So as long as you're above this 95 to like 97 area, Dixie has a very good shot at rallying back to the upside. It's just a matter of how deep is it going to go, right? So if you're bullish, or rather if you want the best chances that the market's just continuing to slip to the downside, you want Dixie to hold here and rally back to the upside. Because we know Dixie is inversely correlated to the markets, right? If Dixie's strong, people are typically going to be risk off, not risk on, because what's the point in risking your dollars in a risk on market when the actual denomination, the US dollar itself, is gaining strength? There's no point. Just hold the dollar, right? Your money's gaining value. It's not losing anything. So if you want the highest chances the market should carry on going to the downside, you want Dixie to hold here and eventually build back to the upside. If you want the best chances, all the sort of the wind blowing in the right direction, let's say, for a relief bounce, then you want Dixie to actually slip, is what I would say. Because again, why would people be holding on to the dollar if the denomination itself is weak, right? You would flock onto things like metals, you would flock onto things like risk on assets, stocks, right? Crypto if you want, so on and so forth, right? So since this is a support that currently would favor perhaps a bit more downside on the market, but if this slips, then there's a chance we get a relief bounce. Is what we're saying over here, right? But that is the Dixie. You don't need to do much. You can do your yearly buy sellers and stuff. But currently, the best way to look at it, in my opinion, right now is in the midst of a absolutely massive wave structure, very big one. That's the one currently in play, the Garley Deep Garley combination, right? So that's the Dixie. Let's carry on going on. So next is USDT dominance, right? Now, USDT dominance. This is your 2022, right? The 2022 bear market, 2022 seller month, 2022 yearly seller zone, which is right over here. Obviously, what we've done so far in this year, 2026, is we've gone and we've retagged this. Right now, I don't see many people looking at this right now, but the fact of the matter is, Dixie has done what many cryptos did, what Ethereum did, right? What Solana did. This is going for a double top kind of structure right now, look. Look at that, right? Trend line, double top kind of structure. And why is that significant? This is significant because as bearish as everything looks right now, if USDT dominance, not Dixie, if USDT dominance decides to reject from here in a big way, then we know typically that's going to be bullish for risk on assets. In this case, crypto specifically, right? So we could see a very nice relief bounce. Should this rejection lead to a nice little move down again, right? Now, not only that, but if you were to take a look at this, number one, what is this? We have a completed bearish bat, right? There's your 438, there's your 886 right over there, 2.15 to 886, most importantly there, right? So we have a bat 886 right over there, and we also have right around this area here. If I was to turn this one off, we also have a butterfly 786, 1.14. So this is the extension of the butterfly, right? Butterfly 1.14. So we have a massive PRZ once again on USDT dominance, right? There's the butterfly 1.14. There's the bat 886. If we can now go and structure here starts telling us, yeah, this looks distributive. Guess what? It's probably going to be in your best interest to try and actually look for things to long or look for things to buy, right? Just buy some spots, so on and so forth. Simply because if it rejects from here, we know in terms of correlation, right? This is not a direct correlation. It's not a X equals Y relationship. It's an X equals 1 over Y relationship, just like Dixie, right? So if one goes up, we're saying the others goes down, meaning if USDT dominance goes up, typically crypto markets, Bitcoin goes down. So if USDT dominance goes down, then typically the crypto market is going to be having a relief rally to the upside, right? It's inversely correlated because this is showing you how much of the crypto market cap is currently in stable coins. If you're bullish, you don't want people holding stable coins. You want them spending those stable coins, converting it into your cryptos, right? So if it rejects from here, then you can look for your T1, you can look for your T2, and the one I'd actually play right now is this one, right? This is the main structure that's hit. So once again, if I was to take this for harmonics and we go from A, go up to D, T1 is between 6.99. Well, this is the entire T1 zone, but the actual T1 line is 6.99%. Actual T2 line is 5.74%. Right? For now, I'll just leave the entire thing on. There we go. So just to bear in mind that USDT dominance is currently at resistance, not a support, at resistance, right? It's trying to flip that 1.44 of the butterfly back into support. But what we're looking for really here is we're looking for distributive structure, right? We're looking for inverted head and shoulders, inverted smiley faces, like trap buyer kind of scenarios, right? In terms of wicks, so on and so forth, right? That's what we're really looking for here. But supply line, yearly level, rejection from both right now. So let's just see what kind of structure we build in this area. I really hope we get some premium distributive structure because it might take a while, right? It might take a while to play. I might take till like Q3. If you're to believe seasonality, you'd expect the bottom to come in around October, right? But yeah, resistance on USDT dominance, and it's not just USDT dominance. We've got USDC dominance as well. USDC dominance didn't hit the 886. I was really hoping that'd be where the bull market bottom happened. But we're getting this move up. Doesn't matter. Does that invalidate this wave structure? No, it doesn't, right? If this goes and puts a lower high in, this is still the wave structure that will be valid. So for now, what we're saying is this might go, put another lower high in, and then the next bull market we have, maybe that's when we get towards the 2.61886 targets, right? Still valid targets here to have. But remember, harmonic is not valid until it's been complete. So this is not a valid harmonic yet, but it's still a valid idea, right? So I'm still very much liking the look of this massive 886 structure here, 2.618886. I think now, looking at everything, we'll probably get a next bull market, right? Because that area, which we knew it needed to be resistance for us to hit this, obviously we know it's when it flipped into support, 12th of January 2026. And since then, obviously we're looking at the next range, right? The next range, if I take a look, do we have... Well, you guys can go and put buy seller zones on, right? Macro reads, seller zones on right over here. You can go put your fair value gaps on higher time frame liquidity levels. But this is USDC dominance. If I was to do this, got a very nice target at 0.5%, as we can see, and so there is an absolutely beautiful target for us between 3.735 and 3.8%, which is just slightly higher. This area right here, 3.735 to 3.876% is the area I look for the next sort of major point. So stablecoins can still climb up a bit, right? They can still climb up a bit because USDT dominance, if it wants to retest the key level, we know it's 8.77%. It can go for another shot there. USDC dominance, like I said, 3.73 to 3.87%. Still go for a shot there. And here is USDT plus USDC dominance, so both of them together. And again, this also has a beautiful wave structure, which clearly is not being hit right now. So that might be next cycle. It might never get hit, right? But until this C point is violated, this becomes a valid target to try and look towards. You could have gone for a BAM trigger, right? But you haven't on the weekly anyway. You might go for a higher time frame BAM trigger here. But again, all you're simply looking for here is another lower high. Another lower high is what you're looking for. But again, the actual diagonals were never lost, right? 852, 876, 886. Sorry, 852, 87, 886 right over here. The diagonals were never lost. The liquidity rate of the golden pocket support, that intersection was defended, and then that led to high intersections, and then it just led to defense, right? That's it. Intersection to intersection. If you take a look, here's the intersection here. There were some intersections here. We missed the time for that. Where's the next intersection? Literally just there, right? We had one intersection here, another intersection right over there. So right. So this is USDT plus USDC dominance right over here. So as you can see, these are all in an uptrend right now, right? They're all in an uptrend, and there might be some ABCDs you can draw. That looks like a 382 to me. So if you were to do something like this, for example, pretty much 3.14 has been hit, right? You have one more target left, which is 3.618, which is gonna take you up over here, somewhere around this region, somewhere to the 236,214. So 13 to 13% altogether, which again makes sense because we know we're looking for a retest of around 3.73 to 3.87 on USDC, and anywhere between 8 to 9 on USDT, right? So you add those together, it makes sense then that this would be a valid target for us to aim towards, right? So all of these are lining up for stablecoins to perhaps have a little bit more of a move up, right? And of course, locally speaking, you've got these seller zones here. You need to get above that, of course. Lower time frame, you might actually get a different story. But on higher time frame, that's a target. And then once these hit, all you're looking for is distributive structure. If you want to buy spot, if you want to go long, right? Here's the playbook. If you want to buy spot, you want to go long, you want to think, and it doesn't have to be all buy in one. It doesn't have to be, I'm going to buy everything at once. It can be, that's my next area to perhaps layer in, or that's my next area where I want to set another set of limits, so on and so forth. You're doing so if you go to these levels and you see that sellers are trying to take control. Now, again, some of these levels have already been hit. Like I said, that yearly retest has already happened, right? So now you're thinking to yourself, until that gets flipped, you're on USDT dominance has hit resistance mode. It is now up to don't get it twisted, right? It is right now the job of the USDT dominance bulls to go and reclaim 8.77 to 9.4 into support, flip 9.13 into support. If that happens, this goes to new all-time highs. USDT dominance in price discovery, the crypto market is going to look absolutely dog shit, right? But until that happens, it is up to the buyers to prove that they have what it takes to actually flip that into support. I.e., it's now currently the sellers' jobs. The sellers have it in them, right? If the sellers have it in them anyway, it's currently on the bears to prove that they've got what it takes to keep the market down. Because if not, right, and they can't, for example, go and flip this into support, right, and eventually, if you print a distributive structure, then you can't be surprised if it once again collapses from that set resistance, from the set supply line, so on and so forth. Maybe like a raid to like a lower high, right? Something like what Lemonade did. And if that happens, then again, inverse correlation. It's not X equals Y relationship, it's X equals 1 over Y relationship. You'll be looking for your risk on assets, in this case, specifically to crypto, you'll be looking for crypto to catch a relief bounce at the minimum, right? So pay attention to these areas where, stable coins is, because a relief bounce might honestly be closer than you think, right? Especially if, for example, right, we go here, there's your seller zone. If you cannot get above 8.41%, right, if you cannot go and get above 8.41%, you start distributing literally at 8.41%, then that's the area where I look for scalper swing long, so on and so forth, right? If you go and you distribute around the actual this itself, that's where you get your big spot buys in, because if you're going to throw size in anyway, it's going to be where the risk is lowest to yourself. It's simple. If you throw big spot size in when distributive structures coming in at this area, if it gets invalidated, let's say 9.13 starts being support and you start breaking above 9.4, you just cut your spot bags, because chances are, market's going to go much lower, right? Because it's about to go into price discovery. But if you're wrong, you want to be wrong here. You don't want to be wrong once the move's already happened, right? This is something obviously we've been looking at for a long time. For those of you that followed me in like Unity, AR, so on and so forth, in those servers I've been in, we were looking at this, literally this, right? If I go here to master list, what we're looking at is literally this, back over here, right? We were saying, okay, with this distributive structure, we're not getting above, and we came down with one of the lower high in. At the same time, Dixie was also rejecting, right? They were both doing what needed to be done. This is the area where I gave so many plays, right? If you guys remember back in 2022, 2023 was one of my best years in the last, like, let's say 4 or 5 years in terms of like, challenge accounts, in terms of the calls given, so on and so forth, right? I gave so many swing longs, I gave so many scalp to swings, all in this area. And this is where majority of people found out about me as well, right? Because up until this point, I was being very, very private. I wasn't in many groups whatsoever. And then the reason I did it here is not because I knew I was going to be right, but because A, we have distributive structure forming on the higher time frame. B, we have resistance. Buyers keep attempting to break above, i.e. sellers, right? But they can't, right? So if you must speak frankly in terms of just buyers and sellers, buyers keep attempting to break above, but they can't. They're getting trapped here, right? We have trapped buyers at resistance with distributive structure forming. So if I was to enter...
Bro, we cannot hear you. Nothing is happening with the sound.
Can everybody... One sec. Are you good? It might be your mic, brother. Erika, I'm not sure what's going on. Can you hear me now, bro?
Yes, now yes.
Perfect. Okay. So let's go here. Distributive structure, right? Trap buyers at the highs, at where the distributive structure is coming in, at resistance. So the reason I gave all them calls back over here, right? And you can go back to my channel, like many of you guys are in Unity, many of you are in, some of you are in AR. You can go back, you can take a look, scroll through the channels, it's all in there, right? The reasons I gave all them calls over here isn't because I was thinking, yeah, I'm definitely right. It's because if I'm wrong here, I'm wrong by the tiniest amount possible. If we start flipping above this box, right, we start getting above this, I can cut with minimal losses. I can throw them in size, and I have a predetermined amount of risk here that I'm happy to take, because I understand that if I'm going to take a risk, it's going to be here. There's no such thing as a risk-free bet, right? So if I take that risk here and it works out, then we have all this entire range to play, right? And literally we went to where? The range bottom. And we even went to the line in the sand I drew. I said, listen, like if you want to go full price discovery, that red line needs to be lost. That's your line in the sand, saving grace, right? That's the saving grace for the bears, because that's the one line that's never been lost throughout history, right, as you can see. And we couldn't break it. Buyers couldn't break it again, right? But the reason for that was because this is where the risk is minimal. And if you're going to go short, if you're going to sell, take profits, so on and so forth, right? the risk is minimal. Over here, if you're going to short, the minimal risk comes in, again, right over here, because if you get below this, you cut. But as long as you're above this, you'd hold, right? In the same vein, right, in the same manner, as long as you do not go and completely break above this area now, right? Especially the closer you are to this area, the tighter your risk is, right? Because again, remember, you have to be comfortable with taking a risk. The thing is, don't get comfortable taking shit risks, right? Yes, we have to take risks to be successful. Many people equate that to, oh yeah, I'm just going to do this random, absolute, nonsensical thing that I've not thought through, and I'm just going to hope for the best. That's not taking a risk. That's just doing something without really predetermining, giving it any sort of prior thought, right? But if you go to this area and you see distributive structure forming, and you see buyers again, once again, attempting to break above, but they just can't do it, then you have historical price action correlation. You have the supply line correlation, right? You have the fact that buyers are not, for this chart, able to break above, trap buyers, right? And most importantly, you'll have a tiny buffer room where you know whether you're going to be right or when you're going to be wrong. Because if you, for example, start putting distributive structure in over here, right, something like this, and you enter spot here, and then this starts to do this, guess what? You get out of your spot. Yes, you're going to take a hit, but would you rather take this hit, or would you start entering when things over here and you have this entire room to worry about? Pick your poison, right? There is no such thing as risk-free bet. The fact of the matter is, you only execute, even if sentiment is completely against you, even if everyone in X is screaming that we're going to keep going lower and lower and lower. If price action, which is the important thing, tells us we just aren't breaking above this, this is the area where you would, for now, look to get into spot, right? If this flips, just get out until, because chances are you're going to go into price discovery, and if that happens, crypto markets are going to go way lower. So you get out before you're left bag holding whatever you bought, even at these lows. Right, but that is USDT dominance. Sorry. Right, so yeah, let's see what happens over here. But for now, 8.41% is your line in the sand, right? If you cannot get above 8.41%, obviously there's no shot you're hitting 8.77. If you flip that into support, that's when you need to pay attention to this area, right? 8.77 to 9.13, and then 9.13 to 9.48. And you make your portfolio decisions, so on and so forth, based on the price action you get throughout this zone, the structure that builds over time in this zone, right? So that's stable coins. We looked at stable coins. Let's look at Bitcoin dominance next. Bitcoin dominance at the 0.5. Once again, let me go ahead and delete all of these. There we go. Let's take a look. I mean, Bitcoin dominance doesn't really look good, to be honest. It doesn't look good. No. So let's get this straight. Bitcoin dominance currently, no word of a lie, looks distributive. Which, if you're looking to get into alts, is good news, right? Because obviously we know Bitcoin dominance coming down is one of the requisites we need for, alts to cash rotations. The key thing is Bitcoin itself can't be absolutely spiking in value to the downside while that's happening, right? So simply just within a buy-seller zone. It's no wonder that you haven't actually lost this area yet. It's a buy-seller zone created from the last 2 years, right? But that does look distributive. I can't lie. That doesn't look good locally speaking, which again is good if you're trying to get into alts. That's simple. You don't even need to complicate it. That looks distributive, right? It looks like it's starting to build a distributive structure. So let's compare this then to the totals, right? So total one, not a surprise, absolutely like just falling off a cliff, right? But that's because obviously the crypto market as a whole has been falling off a cliff. So once again, let's get rid of this and let's make it something fresh for you guys. And again, it's not a surprise, total one rejecting from here. These were predetermined levels, just like Bitcoin, right? While everyone was screaming for 210k targets, I've been telling you guys, the blow off top targets was what? It was between 110 something to like 130 something was the blow off top targets. We had the macro ABCDs, right? We can look at that in a minute as well. The total, same thing. We had the macro ABCDs. 786 1.272, and then there's the 0.5 2.0 originally, right, which is right over here. Then after that, what did you have? You had the 382, and then the 2.24 2.618, 3.14 3.618. So you hit the first half of the 382 2.618, right? So the 2.618 there was the top. Let me get rid of this, delete. And this harmonic, while it gave you a reaction, it ultimately just led to a move back to the downside, the shark. So let's get rid of this as well, not needed anymore. Actually, wait, no. Let me not get rid of things here because that's my main. Let's just go over here and take a look at what we are in for. So total 12 months. Let's build out this chart, shall we? So first things first, yearly fair value gap has been filled. The other one is way lower, so I don't know if that gets hit anytime soon. The next thing is just going to throw some random lines on the screen. Okay. So very key area, evidently a very key area right now. So we can see 2.31 to 2.32 trillion, very key. Reason we're turning into resistance. Add consolidation range mid. Perfect. Okay, so for total one, it's very simple. Once again, higher time frame has been breached, right? The last higher low that led to the proper higher high has been taken out. So again, if we get a relief bounce, we're expecting a lower high to come in, right? Once again, if you're going to, and if you're looking at total one specifically, like you're thinking about crypto as a whole, but you're also thinking about Bitcoin. As long as you're above for now, right? We have 2.19 trillion and the consolidation range made. As long as you're above that, that's your line in the sand. So if you're going to scalp long based on this, where would you do it? You do it at this zone. You do it at this zone. And if you get above that, your targets would be to this. And if you get above that, your targets would be to this. Very simple, right? So you would take your trades accordingly. As a whole, if you want to think about this in a zone setting, there's your big zone right there, right? If this entire area, for example, is maintained as support, right? Then even though the breaches happen, you'd expect to move up to maybe like a 382, like a 3.4, maybe 0.5, something like this, right? But you'd expect to move up to perhaps like a lower high, right? Because there is now your higher time frame. If you switch to the monthly, there is your higher time frame shift in structure, right? The last high low that led to the higher high has been taken out. So you can't be surprised if over the next few months something like this happens, right? And then you get like one of these perhaps, right? To like a proper high low, somewhere down over here. But as long as this holds, you can't be surprised if you get some sort of relief bounce, even if it's to the top of the consolidation range, right? If you want to talk inverted smileys, you could get one of these, something like this, right? It might not give you this, but yeah, we'll see, right? But the fact of the matter is, as long as this is support, this is not where you look for fresh shorts. Simply because a bias can defend here. You have room for liquidity to be added back into the crypto space, i.e. for prices to go back to the upside, right? So that's total one. Add support, add very important support, in fact, right? Consolidation range mid, your yearlies, right? You've got some yearlies here. Fair value gap mid just below you as well, at the top of your yearly fair value gap high. So yeah, as long as this is support, I wouldn't be looking for shorts, not at all. If this holds, I would expect a relief rally. But what I want to look at is the other totals. I want to look at total 3, right? So on and so forth. So this is total 2. Let's get rid of this. Just look at it fresh. Delete that. There we go. Yeah, total 2 rate to just devastation. But once again, been at support. Not actually hit the support yet, so I would anticipate this drive into this minimum. It's a matter of time, I think, till it goes to there. And what one can also take from this is actually we are building this. Come on. And that is, in my books, a completely valid parallel channel. But if you want to take it to the absolute low, it's going to be to this one. But for now, one can actually do this. Oh, not that one. If you pin it to this one, that makes more sense. There you go. So, in the midst of this parallel channel right over here, we're about to approach the 0. So here's the mid, here's the quarters, right? So here, if you think 0, 0.25, 5, 0.751, about to approach the 0.75 area right over here. So parallel channel wise, lot of room for further downside, potentially speaking. And last but not least, in terms of what was I going to do? I was going to do this. Deep retracements. The lowest point here, I believe, is. What's the lowest point? Is this one? Yeah, the 2022 low was the lowest point. There's the high. Perfect. So you'll be messing around with the golden pockets and the liquidity rates of the golden pockets and stuff. So if I was to do that once again, one sec. If I was to go from here, wait, there, literally. These are my front runs liquidity rates of golden pockets, right? You hit the 702, 707. So if you can reclaim the actual golden pocket itself, which if I put it on for you guys, there we go. If you can base around this area, you're looking for that move up to a lower high, right? For now, you're not thinking, oh yeah, we're gonna make new highs. You're simply thinking lower high. But to be honest, yeah, in the case of Total 2, technically speaking, the trend is still to the upside. Because here's the last high low that, let's say the high has not been taken out yet. I do think it will be taken out, but it's not been taken out yet, right? So if price action doesn't actually go and take that out, Total 2 might, if this reclaims, it might go all the way back up towards like 1.39, right? 1.45 trillion. Wouldn't be surprised if it went all the way back over here. Because that's just historical. Like anytime this holds, look, what's happened? Remember how this works. Anytime this holds, the adjacent golden pocket to the front run minimum has always been hit, right? So if this holds, I wouldn't be surprised if something like that did come to pass. But that's Total 2. So what we're actually looking at here is Bitcoin dominance looks distributive, right? Looks like it's ready to peak out and drop. While Total 1 is a support, Total 2 is a support, and trend is not lost, right? Unlike Total 1. And now if you look at Total 3, well, if you look at Total 3, again, let's draw a fresh chart for this. So I've got some yearly levels already on there. So I've got 2022 and 2021. Of course, there's this I need to put down. Go. And then there is this I need to put down. 2025 low has been raided. Oh, let's use green. Nope, let's use something else. Orange. Nope, don't like that color. Blue, perfect. Okay. So currently a macro read 2024 mid. Here. technically speaking, that low has been raided, right? And you've got a raid to a reclaim. So this is beautiful because here's one. Look, if you want to buy any sort of altcoins right now, right, you can get into altcoins, right, and you can simply say if you want extremely tight validations, if 686.71 billion is lost, you're going to get the hell out until you either hit lower levels or you reclaim. It's that easy right now to manage your risk, right? And again, you don't even have to go all in. You do not have to go all in. There's loads of different entry models. If you want to use my own, you can use 20, 40, 40, right? Obviously, you change the ratios to depending on your risk management. You can just DCA over time on a regular basis. You can one clip if you want and treat a spot bag like just like, all in, but tight invalidations to really get that position size to work. But invalidation wise, it's so simple. If you turn 686.71 billion into resistance and you cannot maintain structure and support here like the bars are doing right now, you've got no business being in any trades until it either reclaims or you go to lower levels. But as long as this is above like this, right, you'd be betting that, okay, I'm going to have some sort of exposure because markets could go back over me. So once again, let me get this straight. Bitcoin dominance looks like it's about to fall off a cliff, right? We've looked at that. It's currently at doing distributive structure, as we've seen. And yes, it's a support as well. But look at the difference in structure between Bitcoin dominance, right, which looks to be pretty much at the peak of this move. I'd be surprised if it's not. There you go. I've just about front ran this. But Bitcoin dominance looks to be pretty much at the peak of this move. It's putting in for now what is distributive structure, right? And to invalidate this distributive structure here, you need to go and flip this back into support. If that happens, chances are Bitcoin dominance probably breaks out to the high side, right? But as long as you're below this, you're in distributive structure. Don't get it twisted. This is distributive, right? So Bitcoin dominance is distributive while total 1 is a support, total 2 is a support, and total 3 is also a support. Again, I might sound like a contrarian saying this, but in the middle of everyone being extremely bearish, I'd say this is areas where if you find some coins you like, if you find some coins where it's really easy to manage risk, you can just get into some spot and forget about it. And by forget about it, I don't mean like, oh no, just bag hold it. I mean, forget about it until invalidation hits. What's your invalidation? It's going to be a mix of things. Well, one of them could be Bitcoin dominance reclaiming that area and invalidating the distributive structure. The other one could be like total 1, total 2 losing resistance. But even though I say one or the other, these are all going to be happening at the same time, right? Because markets are linked. So if this is indeed going to be where buyers sort of form a base and give us a relief rally, then it makes sense because total 3 again as support, total 2 as support, total 1 as support, right? While Bitcoin dominance distributing, right? If Bitcoin dominance goes to flip this back into support and invalidate the distribution, at that particular moment, total 1 is probably going to be turning this back into resistance. Total 2 is probably going to be losing that 702, 707, and total 3 is going to be below this. So invalidation is going to be hit anyway, right? So if you are wanting to get into some positions to play the relief rally, whether you want to have a reactionary trade, whether you want to look for some scalp to swing longs, whether you just want to buy some spot bags, you could literally just buy some, and your invalidation could simply be if 686.71 billion is lost and turned to resistance, right? You start closing below, you cannot get back above, then you just simply cut whatever you bought. Minimal risks. But again, that's what we're aiming for. We're aiming for minimal risk, maximum rewards, right? We're not aiming for no risk. There is no such thing as no risk, right? So, yeah, the totals look good. Others, let's take a look at others. These didn't come to pass, so delete that. Delete. I mean, technically speaking, it could still come into fruition, but yeah, I'm not really liking the look of it. I think 707 would be next, ideally speaking. Yep, 707 is right here. There we go, 707. Meaning this goes to a 1.414, right? 1.414 is right there. So in terms of others, right, we have this. The macro ABCD is still intact. You've hit both your targets now. The only thing left to hit is like, the primary projection of the actual wave structure. But as long as the 702, 707 is respected, Actually, wait, no, this is wrong. What am I doing? I just realized there's a peak right over here I've ignored. So it's not going to be that. It's going to be a 786. Perfect. Look at that. 1.272. So we've hit, like, you know, we have hit wave structures, right? We've hit the 0.786, and we know that for a 0.786, we're looking for a 1.272 move back to the upside, right? So again, if that's, as long as you're for the 786, others is now also at deep retracements. It's that support, right? We're at deep retracements. If you lose 786, the only thing left for you to do is go hit the 87886, right? But again, as long as you're above the 786, and you can look for, again, yearly levels of these areas, right? So for example, there is a whole host of buy seller zones in here, as you can see. I'm just going to go and put one on. There you go. Right, so the 786 lines up with your 2024 low, right? There is also your buyer zone. If you really wanted to, you were so inclined, there is your buyer zone from 2025 there as well, right? Let's make that, actually, let's make it in yellow or something. Really contrasted. But here, you've got some local support resistances, right? In this range. But the low where you're currently at, the 786, that is the key thing. As long as you're above that 786, you can't be surprised if price once again decides it wants to grind up from here. So if you were to look at this, right, with no confusion, right? If I was to turn off group one, oh wait, no. If I was to turn off this and these two, if you were to look at it like this, it's very simple. What we are saying is you are currently at historical support resistance, right? We can see that. We can see this area has been resistance, it's been support at the same area, right? We're at historical support resistance. So if the historical support resistance is held, right? Let me literally make it as simple as I can. There you go. If this historical support resistance is held, why would you bet to the downside when it hasn't turned into resistance yet? The historical support resistance is currently still support. So if this support holds, you can't be surprised if move to the upside is triggered, right? And again, it looks like a dream, right? From here all the way to 500, but I'm not saying it's going to happen, right? Right now, obviously, many things are trending to the downside, but it's from moments like this where then, you know, price goes up, the last level high, the little lower is taken out, and then all of a sudden trend flips. Again, if this is lost, you're going to get the 886. So if you look at it in that regard, what you have is very, very simple. Even in terms of others, you have this very, very nice zone right over here between 161.16 billion and whatever this is, right? 156 billion. As long as you're above that, you'd be prioritizing buys over sells. If you turn down to resistance, you get rid of your buys, you look for shorts. It's as simple as that. Scalp shorts at that, right? I don't want anyone opening swing shorts down at these lows, but like scalp shorts because, you know, you have more room to the downside. So once again, to reiterate, Bitcoin dominance looks distributive right now, while total 1, total 2, total 3, and total others is support. Now, if you were to go and take a look at many of these altcoins, right? Many of them have now completed M shapes. They are at areas where it's historical support, right? They've had deep retracements. So, I'm not saying buy. You guys do what you want. I'm not a financial advisor, right? But I'm saying, if you wanted to make a logical play based on all the information we have looking right now, you would right now be prioritizing buys on some alts that look like, you know, they've got very good RR opportunities. Whether that's you one bang it with tight stops or you try to do a buy campaign over time, right? Based on all the information we have, it would be inadvisable to be looking for shorts down at these areas. Because even if you're just after a reactionary bounce, chances are you're going to get a reactionary bounce rather than just a straight candle down. Until, right, I can't sit here and tell you, oh yeah, in 3 days time, we're going to get a bearish engulfing candle. Who knows? No one knows that, right? And this is one of those things where, you know, people who don't know how to trade, they won't do anything in here, right? And, you know, let's say if I was to give a call in this particular area, and then a bearish engulfing candle comes in, they'll be like, oh, you gave a call at a shit time, you're trying to blah, 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 blah. But based on the current information here, if you take a look, you can only trade off what information you have, right? You can't go to the future, glean what's going to happen, and then come back and trade. Based on the current information, this is the area, if you're going to take a risk, this is the area where you do it. This is the area where you do it. That's, you know, looking at all the totals, that's what it's telling me. right? Looking at total 3, total 2, total 1, total others, looking at Bitcoin dominance, how it looks distributive currently speaking, right? And all of them have there's very, very tight invalidations, very, very tight. But USDT dominance has hit resistance, right? USDT dominance could go up a bit more, right? So there's still a bit more room for growth on these. But all in all, I'd say looking to do some bids on some altcoins perhaps, right? Because looking at all of this, total 3 and others are really where the edge is, right? In terms of like, very easy invalidation. Looking at these, based on all the information we have, yeah, I'd say looking at alts, tight RR alts is probably the way to go. Again, not financial advice. You guys do what you want with this stream, right? I'm just here to give you guys the key levels, give you guys my technical perspective. So it is easy for you to make an informed decision. But this is others against Bitcoin. Again, others against Bitcoin out of the supply line, right? In fact, is this going to count as a falling wedge? I was going to say I'll be really surprised if it did. There we go. Yeah, falling wedge. Which if you get a proper break out of the falling wedge, the target is towards 0.29. This is others against Bitcoin, right? Hit macro levels. So does this make sense, guys? What I'm saying and why I'm saying what I'm saying? Okay, I'm not sure why the sound is off. Can everyone else still hear me? Because some people can hear me, some people can't.
Yes, I hear you. No, sometimes it's dropping.
Yeah.
Probably your signal is dropping.
I think probably my signal, bro. Yeah.
But we need to refresh ourselves also.
Okay. I'll be back to normal when I go back home. It's gonna be like I think 12 days, and I'm back. Okay, yeah, it's probably the signal, guys. Plus my shit mic is probably picking up my voice sometimes and not picking up the others. But does it make sense, guys, what we've gone over so far? Are you guys in agreement? Are you guys disagree? Based on what we see, I'd say Bitcoin dominance looks distributive. And again, this can invalidate to bearishness again, right? I'm not saying this is guaranteed, oh yeah, we're going to get a relief rally or also going to fly. But I can't predict what's going to happen in a week's time. I can only give you the structure that's been building, and the structure that's currently been building is, again, lower highs on Bitcoin dominance. This is now distributed. Here's your initial resistance, big raid on liquidity, reconfirmation of resistance, right? We can see that's happening. So until you get back above this, it's distributive. If you reclaim it, then you have one less point for distribution. And even if you reclaim this, you can still go reject and distribute, right? But for now, based on what we currently have, we can always talk about scenarios. Based on what we currently have, Bitcoin dominance is looking to put in distributive structure. While total 1 is a support, total 2 is a support, total 3 is a support, others is also a support, and others against Bitcoin also looks like it wants to get a nice little reaction to the upside, right? DeFi looks good, right? In terms of where it is, retested old resistance into support again and held above. As long as you're above this, you're looking for moves back to the upside, right? So as you can see, many of the totals at support right now, while Bitcoin dominance looks to reject, while stablecoin dominance is also at or near resistance. So that leads me to think there might be a relief rally in store for us soon, right? And I think some alts are going to be really, really catching good bids off of the fact that there's going to be relief rallies. Now, there's loads of alts you can look at, right? Just a few off the top of my head. If I go over here, Say, we already looked at Say, right? What we were saying on Say was, as long as you're above this, why would you not take a chance, right? Look where you are. Everyone loved Say when it was at these highs. Everyone hates Say when it's at these lows. But if you love Say when it's at these lows and it goes up to these highs, you're going to love it way more than the people who's coming in just for the good time, right? But in terms of risk management, again, look how easy it is. Like, all in all, you're looking for a loss at this level, right? You have to contend with the 14% area. And if you don't go all in, right, that's going to be even tighter risk management for you. So for spot, that is nothing. Absolutely nothing, right? another one I wanted to look at, Aptos. Now, Aptos, I wouldn't do anything right now, simply because as long as we're below $1, I am not interested at all, right? But you go and reclaim that $1. You go and reclaim this area here, right? That's what we're looking at for now. Because if someone knows like a history, a chart on Aptos that gives data lower than $1, let me know. But as far as I know, this is the lowest point on the chart, $1. And of course, like, you know, if you're looking at VC prices and stuff, you're going to the cents, right? So we're not even going to talk about VC prices for now, because I can't give you technicals if that's what we're talking about. But you get back over $1, you reclaim that dollar. Aptos is another one you can try to get into with minimal risk, right? Tau, we were talking about how Tau was a very, very good area, right? This, as long as you're above this box for Tau, right? Especially as long as we're 147 for Tau, that white line, you can be in. If you lose the white line, just wait until you get to the low of the box. You raid, you know, you retap some more levels. But as long as you're 147 and the white line, Tau's a bit, right? There's 3 right there, right? Another one I was looking at, and you guys saw it earlier, is SWI. If I was to go to SWI, Doge is another one, right? But let's look at SWI. Take a look at where we're at. Support, demand line here. And if you go to the line chart, I get rid of all the wicks, just pure actual price, support, once again, support. So there's almost like an intersection here, right? And if you look at the line chart, take a look at where we are. Obviously, this ignores the 10-10 wick, but in terms of just price, 618. What is this? 1.6. We are literally at the 3.618, 1.6% of the deep crab. Look, all these points of confluence. So what we're saying is, if you enter SWI here, you could enter like a partial position here, wait for structure to confirm before you enter full position, right? And the invalidation is, if this demand line turns to resistance and this PRZ is lost, you just cut, because why would you hold, right? But as long as this area is where accumulation is happening, you can see buyers stepping in and structures telling you that buyers are interested, sellers are not being rewarded, this is the area where you take the bet on SWI. You get below 8563, there's no point holding, because then you're probably going to go all the way back down towards 46 cents, and you attempt to buy if buyers step in down at these lows. But if this holds, that's not going to hit. So, you know, this is the area where you pay attention, right? That's SWI. Literally 3 right there. SWI, Tau, Say, and Aptos. 4 I've given you, right? Of course, not forgetting the big boys themselves, which is Bitcoin. Look where price is. Sat literally at that yearly, right? Don't forget what this is. This is the yearly point of control I was telling you guys about, right? That we looked at on previous streams. Right there. That's the yearly point of control from 2024. Here, look. If I was to go to footprint charts, too large. Let me go to the 15 and then do this. No, that doesn't make sense. Okay, let's go here. And then let's go back to Bitcoin. There. Look what this is. Remember, this is simply the yearly point of control. Right there. It's the yearly point of control, right? And price is still hovering at the yearly point of control. So, you know, we're trying to reclaim some levels, right? It's slow, but it's doing there. We're trying to reclaim some levels. So like I said, all in all, whether it's Bitcoin, whether it's ETH, whether it's some of the alts, right? You are areas where it's so easy to mitigate risk, so easy, especially on some of these alts, right? Especially on some of these alts. Like I said, just look at this. So easy to mitigate these risks at these areas, to know when you're wrong, when you're right. Massive falling wedge structure. So just bear that in mind. I'm not gonna tell you guys. I'm not a financial advisor. I'm not gonna say buy. I'm not gonna say sell. Why I always do. What I've been doing with you guys. What I've always done, right? Since I started doing this publicly, and since the inception of the server, what I've always done right by you guys is I give you the levels to watch for. I tell you what is the invalidation, what is the validation triggers, right? So you guys know, okay, when do I enter? Well, I've described the validation trigger to you, right? You see this area, you see sellers not being rewarded, you see buyers being in control, aggressive sellers not being rewarded, trap traders. Your risk of reward is very, very good. You take a trade. Very easy to hit to buy some SWI, and the invalidation simply, if you get below 0.8563, then you cut. That's it. When you get below this box, turn it to resistance. There's no point holding it anymore. But as long as you're above this, it's very easy to mitigate risk. As long as this area is being correlated to, and buyers are treating it with respect, it's very easy to mitigate risk. And even on just the relief bounce, right? Even if, I'm not saying this is going to go to the high heavens. Even on just the relief bounce, you can easily catch anywhere between 30 to 50% move ups. Right? On the chart, that's going to be absolutely nothing. That could lead to another lower high, and then we capitulate further down, right? Until October or something like this, if we are going by the same playbook. But getting a 50% return, especially if it's spot, even with leverage, is still it's still nothing to be laughed at. Especially if anyone's thinking of shorting down here, don't short here. Okay, not financial advice, but I wouldn't be shorting at critical support like this. Does that make sense, guys? So loads of coins. I know, again, we'll do a proper altcoin stream next week, right? Sometime next week, we'll do a proper altcoin stream where we can go over different alts. What I'll do is I'll give you guys time, like a week or something, to just put you the alts you want looked at in like the chart request area. I'll pick a few of them, maybe like 10 to 12 or something, and I'll go through them like completely charted from top to bottom. And then we can go over it. But this is more so in terms of just because when it's bearish, when it's bullish, no one wants to sell. When it's bearish, no one wants to buy, right? Obviously, you want to sell when bullish and you see that sign of weakening, and you want to buy when it's bearish and you see signs that, okay, very critical areas, I can take a one directional bet here. Squeeze out those areas. Aptos can be if he reclaims $1. Taos out those areas, right? Says out those areas. So, that is a look at the macro indicator. Let's take a look at a few more things. So, Lemonade. Let's take a look. Hopefully it just dies. Again, this one's the best call. Obviously, hopefully I'll do better like as the year goes on. But so far, this has been the best sort of, because this was called live on stream. I'm so proud of this one. Insane. I loaded 50k into this account, into the CFD account, and I've got it at 104,017 currently. So, XT, Neo, that's fine. A few other things I want to look at. BTQ. A few stocks now your way. BTQ. I want you guys to pay attention to this one. This is one of the ones I shared in the big stock stream, right? Add yearly level mid. Add the ABCD like 886s, right? 886s based on which low you take, but this area as a whole is 886s. So you're just looking for a cumulative structure again at these areas, right? You're looking for aggressive sellers to not be rewarded. You're looking for trap sellers. You're looking for buyers to be rewarded, smiley faces to come in. And if you want to play like sort of tight, for your first zone is $3.71 to $3.47, right? That's your first zone. As long as you're above this, it's a buy to try and aim towards 558. But if this is turned to resistance, I would get out until like 272 is hit. We can confirm whether that holds or not. If it doesn't, then we just wait until like a bottom it comes in, right? First one, BTQ. Second one, HIMS. This is one I went over, and on the long term, I do think HIMS is going to be very, very good. But because of their management, there's a shit ton of negative news that have come out recently, which is why I say. But the reason I wanted to mention this one is because this is at now yearly levels. We're interested in these areas, right? Not just yearly levels. You can also see it is a demand zone, textbook demand zone. Mid has been filled, right? Has it got any wave structure? It's the real question. I don't think this one has any wave structure. I tried to find some, but because you would expect a Cardly, deep Cardly, which obviously hasn't held. So then 1.618 takes it to negative price, basically. So no, I don't really see any sort of wave structure to talk about, but you don't always need a wave structure, right? In this case, how would you mitigate your risk? Simple. If you get below the mid and the cluster of the yearly levels here, you cut. As long as you're above this, HIMS is a very, very easy to manage buy, right? Easy to manage buy. So that's another one I wanted to put on your radar. Another one is ZBCN. Now, this is a crypto, so let me move it up over here. The reason I was interested in this is because I forgot who put this on my radar, because I do not know what the ZBAC network is. It might have been either Rohan or Duke who mentioned ZBCN to me. I'm not sure. But the reason I'm looking at this is because this is hit now. Your demand zone mid. It's also retested your previous consolidation range high and it's held, right? So if the structure can come in here to showcase that buyers are interested and sellers are not being rewarded, again, go look at your footprint charts. Go look at your market order bubbles, see if aggressive selling is being rewarded or not. For example, is this? Oh, this is the crypto one. I don't think it's going to show the bubbles. No, it won't. It's not an exchange chart. But as long as you've got a reason, you've got a thesis, right? Your thesis is if previous consolidation becomes support, and demand zone is respected, and the demand line is respected. If you can sort of, it doesn't matter if you what's the one I'm thinking of, like chop lower, as long as you can ultimately reclaim, right? Something like that's what I look for on ZBCN for a next move up, basically, right? Also, wave structure. Completion points are down over here, like harmonic completion points are down over here as well. So ZBCN, one to watch for crypto. But I prefer things like ZBEC. I prefer things like SWE. Right? I think SWE looks better in terms of risk management. SAY looks better in terms of risk management. Another one. This is I was looking at this in Cabal with Ghost and Alex. This one's a shit coin. I'm not gonna really basically, if you want to look at this one, just type in take USDT, put on this weekly fair value gap over here, right? The weekly fair value gap, and then just pay attention to should it ever reclaim the mid, right? If you get a retest to the mid of the weekly fair value gap, you have a very easy area, especially the listing low as well, right? So this area between 31960 and 30121, you have a very easy area to manage your risk to try and potentially catch a move towards 8 cents. Right, simply because it's been so down in the gutter, it doesn't take much to move money up to this area. So if anyone's watching this, these are the kind of areas where you'd buy. Right now, CCCX, this one I've already mentioned. I've got this in my stock portfolio. Right, it's hit a deep crab 1.618 and the deep crab 2.0. It's reclaiming 2025 12-month macro read buy zone mid. The reason I like this one is because remember this is a merger. Right, this is one of those venture capitalists that eventually is going to turn into another company, and the company is called Inflection. It's to do with quantum computing, and I do like the look of it, right? Which is why I did the same with Lucid. I made bank, right? I got into Churchill Capital, same one. Churchill Capital was the one that merged with Lucid to give Lucid stocks back in the market back in 2021, right? 2022-ish, and that went up really, really nicely. So again, this is, I just like risk management wise. If you enter here, if you lose 1282 to 1279, you cut. Very simple, right? Easy to manage risk over here. Potential smiley face. And my main reason for having this is for me this is a long-term hold, because these are going to eventually turn into Inflection. It's going to turn into the company Inflection, right? Whenever the merger deal does go through. There we go. Big falling wedge. I like the look of it, which is why I want to build positions on this one. This is CCCX, Churchill Capital Corpex. SoFi. Right, I like this one because this is why I was saying don't buy anything here, right? For SoFi, simply because at previous all-time highs, there's no guarantees of a breakup, right? Look, all these trap traders, you distributed. SoFi loves doing this, and when I say distribution, for those of you unfamiliar, some of you newer to the server, this is what we're talking about, right? Inverted smiley faces, right? And once you go through the course, you get really, really used to this. Once you go through the actual core, right? Sorry, but SoFi, if you get a retest of $17. I think somewhere around this area would be a really nice bid on this. Somewhere around this area, right? I'm interested in this. This is like finance, right? This is a really popular one amongst especially the younger people. I heard there's a youngest talking about this one, so I say that I'm in my 20s, but this is very, very popular. So SoFi, I'm interested in looking at this one. Obviously, IREN, I've already mentioned. We got a 70% move off that already. I called this in stock chat, right? 70% move. Obviously, took profits on that already. Move back down to the same area. If IREN can come back down towards 28.25 or something like this, that'd be an amazing bid. But ultimately, I want IREN to go that godly, right? 786 to 886. Especially if you got a deep godly on IREN, this would be an amazing, amazing buying opportunity. Buy it in a smack bang in an uptrend with pretty much where the demand line would sort of line up. So hard to talk right now. I bet my voice sounds weird on it on mic. But yeah, IREN, if it goes down here, for me, that's going to be a very, very nice bid. So yeah, I'm just going to keep an eye on this one. This now has a potential wave structure in the making. So these are just some stocks, right, for you guys. Obviously, if you already know things like NEO, as long as you're above this, you're good to go high. If you get below, you're going to get the type 2, full type 2. We've already looked at AXT. We've looked at Lemonade. So the only one left to look at is actually no, we looked at everything I wanted to look at today. So that is it for today's stream, guys. Was this? Does anyone have any questions? Was this helpful? Like I said, I really wanted to do a macro because I haven't done the macro in a while, right? In terms of Dixie, in terms of the totals, Bitcoin dominance, so on and so forth. So it's important to look at these, right, once in a while. I know we haven't looked at it in a while, but no problem at all. Well, this was slightly different because the last 2 or 3 streams we did has been very technically educational, right? I talked a lot about scalping. I talked about order flow analysis. Looked at those. So I think it's back to basics on this one. Just looking at the macro indicator charts and seeing what it's telling us. And again, take from it what you will. Obviously, whether you buy, whether you sell, whether you long, whether you short, that's up to you. But please make the logical decision based on what we see with price action. That's the only thing that should matter. Nothing else matters. What we see with price action is the only thing that should really matter and influencing your decision to begin with. Pump of the shark. Okay, I'll take a look at this more. Pump looks decent too, to be honest. Just basing off where it is. But yeah. So if there's no more question, guys, I'm going to end this stream over here. Let me stop the recording. Just wait to see. Okay, yeah. I'm going to take that as no questions. I'm going to end this stream over here. I'll put it on YouTube